Every year, the Indian Premier League commands the nation's attention. A cricket ball shatters the wickets under floodlights, signaling another season of massive, high-stakes entertainment. Behind that spectacle is a financial engine that generates thousands of crores in revenue through ticket sales, sponsorships, and broadcasting rights. Despite this massive influx of capital, the governing body behind it, the BCCI, continues to pay zero tax on its IPL profits. This is possible because the organization maintains a full tax exemption by legally classifying its operations as a charitable organization. This legal shielding leaves a multi-billion-dollar entertainment machine essentially untouched by the national treasury, raising the question of who this charity is actually serving. Away from the noise of the stadium, India's top research institutes operate under a completely different set of rules. These labs are the actual architects of the nation's technological future. Unlike the tax-free cricket board, these foundational scientific institutions are required to pay taxes on nearly every essential purchase. Scientific microscopes and essential software licenses carry heavy tax burdens, effectively penalizing the very tools needed for innovation. Professor Mayank Srivastava recently questioned this dynamic on LinkedIn, asking why a nation would subsidize fleeting entertainment while taxing its most vital research efforts. It is a systemic paradox that rarely finds its way into primetime news debates or political platforms. Consider the scale of this lost revenue. If a standard 40% corporate tax rate had been applied to the BCCI's IPL profits over just the last 3 years, the figures are staggering. This visualization shows the gap. The flat line is what the state received, 0. The towering column is what a 40% tax would have generated, over 15,000 crore rupees. To put that in context, consider what that same capital could buy for the public sector. That single pool of revenue is enough to fully fund the construction and staffing of 10 new Indian institutes of technology. Or that capital could be used to launch a nationwide wave of deep tech innovation, providing the necessary grants for domestic semiconductor or aerospace research. The state has made a conscious choice to leave this capital trapped within an entertainment ecosystem, rather than deploying it toward national infrastructure. The IPL is the most visible example, but it is not the only entity benefiting from these carve-outs. Many major Bollywood productions enjoy similar tax breaks, shielding expensive production equipment and massive profits from contributing back to the economy. Wealthy religious trusts form another category of influential bodies that remain largely protected from national taxation. Huge amounts of untaxed liquid wealth circulate within these untouchable entities, while the scientific sectors fight for basic equipment funding. The current tax code provides a clear roadmap of priorities, consistently rewarding mass spectacle while leaving foundational development to struggle for resources. Examining these balance sheets reveals a deeper tension in how a society chooses to value its own time and money. Acharya Prashant argues that these policies are a direct reflection of a nation's psychological priorities. He suggests that when a society prioritizes subsidized entertainment over the hard work of science, it remains locked in a state of medieval regressiveness, valuing old myths and distractions over new discoveries. This logic creates a culture that cheers for subsidized celebrities, while its most talented minds work in underfunded, taxed laboratories. By taxing the tools of thought and subsidizing the tools of distraction, the state actively signals that momentary pleasure is more valuable than long-term scientific progress. Maintaining this trajectory comes with an inevitable long-term cost. Neglecting scientific temperament in favor of spectacle is an active force dragging the country backward in a global race for technological autonomy. Visualize a reality where even 10% of that untaxed entertainment wealth was legally required to fund scientific development. Redirecting that capital would provide the necessary resources to develop local patents, increase research output, and build high-skill industries that outlast any cricket season. We are left with a choice: demand a systemic shift in how the nation invests its wealth, or accept a future where we are endlessly entertained but technologically dependent.